believe over the last 6 quarters, the paint industry has undergone far more disruption than stability. The sector moved from raw material inflation to a phase of rapid price correction, which forced companies to adjust margins and rethink pricing strategy almost quarter by quarter. Demand didn't grow uniformly. Metros remain muted due to real estate renovation cycles, while I believe tier 2 and tier 3 towns became the real volume drivers. But at the same time, organization player benefited as unorganized manufacturers struggle with compliance and cost volatility. At the same time, the pace of new product launches and channel expansion intensified because companies needed to protect share in slower market. The industry essentially shifted from a high margin environment to a more competitive and efficiency driven one.
Abhinish, this disruption is happening for the first time in 3 decades for this industry. Do you think the players are geared for this kind of disruption, given the fact that a huge capacity has also has come in from our industrial house, and then we have consolidation also coming into this sector?
So thanks. And Yes, you raised 2 points. First is we are seeing the entire paint industry also see recovery in demand due to multiple reasons. There is a pent-up demand because whenever there is a high rains, the paint demand gets postponed. Unlike, say, a beer demand or a Coca-Cola kind of a demand, cola demand, which essentially gets lost, paint demand doesn't get lost because in heavy rains, exterior paint is not possible. Now that we have the marriage strong season also, plus rains have ended, we are seeing strong recovery in the paint industry for all players. And our sense is clearly GST rate cuts which happened, which has led to disposable income being higher by 45,000 to 50,000 crore for the entire India. That is leading also to consumption benefit for a discretionary category like paints. Earlier, we had seen the income tax reduction in the April salary onwards. That's also helping. Food inflation, general inflation is at a multi-year low. All these are helping towards a paint industry revival. Last 15-year average, if you see, paint industry has seen a high single-digit volume growth. My sense is we'll gradually come there. The market leader already saw in Q2 double-digit volume growth. Our sense is even in H2, Asian Paint should be able to deliver double-digit volume growth as a second half. Now, the other issue for the paint industry is your question on the new player. New player initially got good traction because they were having the 10% extra grammage, very high velocity of advertisement, the dealer connect, etc., the dealer promotion. Those are quite aggressive. But now what's happening last 3 quarters, we have seen the quarterly sales for the new player broadly being in that narrow range of 900 to 1050 crore range. In Q3, they will also see recovery because, as I said, entire paint industry is seeing a good recovery in Q3. So I'm sure the new player will also see a growth which is reflective of this. But ultimately, now if you see the new paint player is also reversing the 10% extra grammage which came out in the Q2 calls of other paint companies, that it is reversing. So my sense is now the rational competition is going to start at some stage. Already the worst of the competition is behind because if growth is also coming back and the 10% extra grammage is getting reversed, Asian Paint is extremely aggressive. We have not seen Asian Paint this aggressive in terms of advertising and going after the tail of the dealers, which they had lost to some extent to the new players. They are going after that tail, smaller dealers also. Plus advertising, the share of the wallet in terms of the voice is very high, more high than the 50% market share is higher than that. So all this is reflective of Asian Paints being strong in terms of the volume growth in H2. We see the stock doing well next 6 months, 1 year. The titanium dioxide and raw material side is also benign. So our sense is the new player will also coexist. Now the disruption is not happening. They are not doing something which has not been tried by the earlier paint company in terms of 10% extra grammage, dealer incentive, the working capital support. Everything has been tried. It is not something which really leads to decision making by the end customer. End customer really decides on trust. Next 5-6 years, he has to be sure that the paint will last for the next 5-6 years, and paint is just 40% of the total cost. 60% is the manpower cost. So we are quite confident Asian Paints will touch new highs in the next 1 year.
Shalu, if you look at the entire environment, your raw material prices are benign, and that's allowing the existing players to even correct some of the prices and be very competitive. Do you think that the competitive headwind which was there for last couple of quarters and has peaked out now and is behind the entire and behind for many of the companies now?
So, according to me, competition is no longer incremental. It's aggressive and it's reshaping the market behavior. So, the new entrants which have entered in the market and disrupted the whole market, they entered the market with dealer level economics, with upfront schemes, extended credit, and usually deep discounts. So, I believe that. These things have temporarily impacted volume stability for existing brands, but now everyone is innovative. Innovation in the industry is no longer optional. It has become a survival tool, and with everything, maybe you can say that things are beyond, but I believe that things are still head on head, and every industry is facing the challenges and everything, and the competition is not ahead of us. No, it is still coming, and we have